Good morning, everybody. It's Serene Education with the 4 majors news update for the 20th of January 2014. Okay, start of new week. Apologies, I was thinking end of new week. Geez, start of a new week. Let's have a look and see what's happening on the 4 majors. Start on the euro against USL on the daily. You'll notice that we have had lower lows recently. Euro has stalled against the US dollar in the past couple of months, as we failed to see price breaking above the monthly 61.8 fib level here, and subsequently the longer price actually failed to break above it. The more likely price was likely to revert to the downside, and sure enough that has been the case. You can see the indicator box here, primarily long-term sentiment still driving higher. The institution moving average is still below price, as you can quite clearly see. However, we do have the daily and the 4-hour not really stacking up with that long-term sentiment, primarily because we have seen consolidation. However, you can see that the euro on our intraday is starting to see a bit of positiveness, and primarily positiveness because price has actually fallen into a major support and resistance level in the shape of the 50% monthly fib level. So just going to pan out so you can see that. So notice the candlesticks have been blue, substantially blue for a number of months. In fact, the last time we saw some red was back here in July of last year, and subsequently that was not a true signal, primarily because we were still trading above the institution moving average at that time. And subsequently, when we did get a bearish engulfing candle, the Osmo indicator had actually turned dark red to tell us that the sentiment that actually saw the breakout candle wasn't genuine. So therefore we did have to wait to see what the next candle gave us, and the next candle came out and it went higher than the institution, so there was no trade there because it was back up above the monthly, back up above the institution moving average, which is clearly not a sell signal. So here you can see quite clearly that price on the euro is turning red. We had a red arrow a number of weeks ago. Now we have a red candles. However, we're still above the monthly fib level, and we're still above the institution moving average. So ideally we'd like to be trading below both those levels, plus the arrows and the candles will still be negative, to then tell us we should be looking for further negativity towards our 38.2 monthly fib level lows to the bottom. Moving on to sterling, let's have a look up here. Same thing, failing to break above, had breached the monthly fib level here at the 38.2 level. However, not being able to actually carry the momentum higher than the weekly fib level, which is our current high, and subsequently we had the bearish engulfing candle, and price since then has actually started to dwindle. We've gone into a consolidation range, which has happened to be in and around the 38.2 monthly fib level. Price over the past couple of weeks has been very, very consolidative. You can quite clearly see here. The indicator box still primarily wants to favor long-term sentiment. The candlesticks, yes, we've had a pullback, a number of pullbacks along the way. However, the candlesticks have not yet changed color. And the rules of this particular template are that we do need to see a red arrow followed by a red candle, followed by our indicators at the bottom here to confirm with that. However, that is not the case. We have a red arrow, but the candlesticks are still very much positive because the institution moving average is still very much below price. And as long as that happens to be the case, then we should still be looking for price to make or reattempt prior highs. Okay, you can quite clearly see swing high, swing high, swing high, swing high. And as I mentioned, if price is still making swing highs and not breaking price swing lows, then we should still be looking for upside. Apologies, let me get rid of that. Okay, so as it stands at the moment now, yes, we've had consolidation. Yes, we've had a pullback, but that's just the ebbs and flows of trend. However, if price is unable to make to breach the prior high here, in fact, we saw here at 1645 and change, I think it is, then there's more likely for price to make a new swing low. And if that's the case, then we should be looking for lower lows, and then we would need to see our indicator box telling us that. At the moment now, you can see end of last week, in fact, we had a nice bullish engulfing candle after an indecision candle the day before. So we had negativity, then we've had a indecision followed by decision, and this could be complemented as a morning star formation. These 3 candles here, a morning star, and if you do have a morning star, that is the signs of potential change in market sentiment. And that change in market sentiment could be, and you can see quite clearly we have had a number of consolidation ranges around this area, could be the start of a new attempt to the current high. So you can see that if you wanted to, you would have to look into your 4-hour time frame. Straight away we get a buy signal on our 4-hour time frame. However, you'll notice that price has still not breached last week's current high. Okay, we had a very bull candle. However, we had indecision followed by decision, and then we saw price pulling back. Still above the institution, we have a blue arrow, blue candles, RMO is above, OSMO is above, but dark green because of the consolidation. So here, effectively, if we are to see price making attempts of new highs or prior highs, we would need to see this swing low, because remember it's a swing low, to be breached, close, nice 4-hour candle close higher than that. That would then give us a genuine indication that price still wants to favor new highs or attempt prior highs, and then we could look towards that 1565 as our first attempt, and then look towards our prior highs, which is our 1666 and change, as our second target level high. US dollar Swiss franc, here again, negativity. We have seen the US dollar finding a bit of support against the US Swiss franc, sorry, the Swiss franc recently. However, you'll notice that price is now trading into the prior swing high. Okay, and you can see that price is actually stalled at this level. If failure to do so, or failure to see a break above this level, and we won't see any further attempts at the high. Notice we had a blue arrow, but we saw negative candles. However, now we do have blue candles. Our RMO has creeped above the zero level for the first time since November of last year, in fact, but we're still below the institution moving average. Any buying opportunities that arise below the institution moving average, we are actually trading still risk. There's still a bit of risk on that because the sentiment still favors the lows. You can see that the long-term sentiment still wants, or you can see on a long-term sentiment, price is still making major swing lows. Okay, so if we do see buying sentiment stacking up, we would like to see price trading above the institution to give us more of a long-term confirmation that we should still be looking for higher highs. However, at the moment now you can see that our the only time frame that's looking really positive is our 4-hour time frame. And if I drop down to the 4-hour time frame, we do get that bar signal because everything on our 4-hour is matching up. However, you can quite clearly see that price is failing to break above the prior resistance level high. I've marked it off as a support and resistance level horizontal line here, and all I need to see is a nice confirmed break above that. Then I should be looking to tackle prior highs, ideally back towards my weekly fib level here at 23.6 would be my first target. However, until such time as price actually closes above that, then I'm not looking to do any of the other, because if it fails to make new highs, then she's more likely to consolidate with an outcome to make new lows. US dollar Japanese yen, the last pair of the day, seen a lot of momentum after the breach of that massive weekly wedge that we saw through most of last year. In fact, we saw a nice bull run recently. However, that's come undone as we went into the new year. Prices failed to make new highs, and subsequently prices tested prior levels, including the weekly fib level here. However, failing to actually find resistance and then continuing, we saw a nice bullish engulfing candle which led to this tweezer formation, and then price last week reattempted the intermediate trend low. However, the past couple of days has seen a lot of indecision on this particular pair. You notice it's still above the institution. The indicator box is all over the bloody place, which is not really good. However, on this particular pair, I've set targets that if this is to be still long-term positive, I would need to see a breach of the prior swing high here, which is at 104.88, to see any further attempts of my long-term support and resistance level high, which is here at 105.45. Fail to do so, then we likely see further swing lows, which in fact we've seen a lot of negativity over the past 12 hours. In fact, price falling lower but into the institution, and we've seen the last 4 hours closing higher, forming a tweezy bottom. Still no trade for me on this particular pair. US dollar today, or the US market today, is closed because they are celebrating Martin Luther King Day today. Apologies guys, I had to spit that one out. My coffee hasn't really kicked in yet. So you're not going to find a lot of volume this afternoon, primarily because the market's going to be closed for the US. So any market volume you're likely to see would have to be this morning, and then we might see price actually edging further over the course of the afternoon. However, most of the volume we're likely to see is going to be this morning. So look to see if there's any fundamentals that's likely to push any of your pairs or move any of the pairs that you follow this morning. Other than that, it might be a very quiet day. So I'm going to leave you with that, and I might be able to do the video analysis tomorrow. We are doing a course with some of our students in Cardiff tomorrow, so we might not be available tomorrow. So it might be Wednesday that I'll do the video analysis. Hope you have a fantastic trading day, and I'll catch you guys on Wednesday. Until then, you guys trade serenely.